Okay, champs, welcome back to Libertas Trading and welcome to the event preview for the quarterly Aussie GDP data coming out this morning, Wednesday, the 3rd of December 2025. So, could be a nice little mover today on the right numbers, of course, as always. The only thing that stops me getting too excited about this one, apart from the fact that I have to wake up at 1:15 in the morning to trade it, is I do feel this is a pure growth play today. You know, we know the RBA are focused on growth as well as inflation and the labour market, but there's just so little pricing for the RBA at the moment. I don't imagine a really weak or a really hot print, changing that too much. If anything, I'd probably favour a hot print because I think next year we've actually got about 13 basis points of hikes priced in for the RBA. So, maybe a really, really hot print could see a full cut priced in for like the December meeting, but I can't imagine it being, too much of an impact today. So I do feel this is just a pure growth play. So we'll head straight to the trade scenario sheet. We won't muck around today. So just kicking off, there's something a bit particular with Aussie GDP, and that is that a day and 2 days before we get company profits and current account data come out, which basically feed into and they're a precursor for the GDP numbers. So based on poor Q3 company profits Sunday night and lower current account data last night, I think a lower GDP number will be priced into market. So I'll be looking for a larger miss than a beat to make sure markets are surprised and we get the reaction we want. So we'll quickly look at last night's data. So here you can see we had lower current account Q3 data by about 3 billion, and then company gross profits, it was expected at 1.7% and it came in flat. And then profits pre-tax, we didn't have a consensus, but last quarter was 2.1% and this quarter was 0.4. So these numbers should shave, 0.1 or 0.2% off the consensus for GDP. It's always tricky to know exactly what's priced into markets, but the forecasts that we get are made before this data comes out. So, we have to factor this in basically. Just to go back on some previous examples to show some examples of this. So as you can see here, this is last quarter's print. So this was the Q2 data. And the important one we're looking at is the company gross operating profits, which was expected at 1% and it came in at minus 2.4. So pretty substantial miss. And then we also had a downward revision to the prior quarter. So basically markets had baked in, based on all of this data, a lower GDP number. So basically we got, higher by 0.2% on the yearly, and on the quarterly we got a 0.1% deviation, which you wouldn't expect to cause too much of reaction. But as you can see here, we got a fairly decent reaction, which lasted about 20-25 minutes on the Aussie New Zealand dollar. So, it's really important to look at this. And then just looking at the quarter previous to that as well. So this one's a bit of a standout actually. So this was Q1 data from the 3rd of June. Of course, this was the Q1 data from the 4th of June, but in terms of the company pre-profits, we had company gross operating profits print at minus 0.5% when 1.2 was expected. And then the pre-tax profits was at 4.8% in Q1 and then, in Q4 of 2024. And then in Q1, we printed at 0.7%. So basically here, markets were already expecting a lower number based on these numbers. So this number was expected to be lower, the GDP data. It came in lower, and look at the reaction. The Aussie dollar fell as you'd expect and then just completely reversed. So this is why these numbers are really important to look at. So again, based on numbers from, Sunday night and Monday night, we are looking for a bigger miss than a beat just based on what we think is priced into markets. So yeah, it's always difficult for me to, to write some trade scenario plans with exact numbers because we know every every data point's different and there's always nuances. So with this one, I'd be looking at 0.3% or lower, which would be below the minimum and the joint lowest number since Q2 of 2024. So that is 0.4% below consensus, which is a pretty wildly number to be looking for. But just based on those company profits last night, that's a number I'd be looking for a trade. I just think if we printed at like 0.5, that's not going to be a surprise to markets. And we may even see the Aussie rise on that one, just my personal opinion. And then for a hawkish reaction, I'm not looking for as big as a beat. So I'd be looking at 0.9% or higher, which would be above the max and the highest since Q2 of 2022. And then for the yearly data, again, we're looking for quite a substantial miss. I would actually probably rather a 1.7 here, but I would trade a 1.8, so that's the number I've put down. But 1.8% or lower for a dovish reaction, which would be in line with the minimum and in line with the prior, showing no acceleration in growth. Of course, I'd rather trade a 1.7, which would be below the minimum and below the prior, but I do think 1.8 should be enough to get markets moving. And then for a hawkish reaction, I'd be looking at 2.4% or higher, which would be above the prior, above the max, and also the highest since Q1 of 2023. Of course, expected reaction, bad data, Aussie down, good data, Aussie up, nice and simple. So in terms of medium term plays on this one, so for a dovish reaction, I'll be looking at Aussie Kiwi shorts. So we had a bit of a disappointing move after that hawkish 25 basis points cut last week from the RBNZ, but I still favour downside in the pair. This is the purest growth differential play for the Aussie. And after that 325 basis points of cuts for the Kiwi over the last couple of years, we expect to see growth pick up, as do the RBNZ, with their new governor, Bremen, speaking about this last night. I think you pronounce it Bremen. Considering the pair is historically a mean reverting pair, it's looking well stretched right now, and I wouldn't be surprised to see some decent downside on a bad enough print. So we'll quickly look at that chart. Again, you can see here the move's just been absolutely relentless. We found some really nice resistance at that 1.16 level, and we're starting to move a bit lower. You know, as I said, we have had disappointing price action, but I wouldn't be surprised if we got a really bad print today from the Aussie GDP. Wouldn't be surprised to us hitting that sort of, maybe that 113 level could be a nice place to take profits for any medium term holders. And then for a hawkish reaction, I'd be looking at pound Aussie shorts. So a relatively risk neutral pair, same as the Aussie Kiwi, which I always favour in these choppy and volatile environments. Still bearish the pound after the budget upside quickly ran out of steam, and a massive beat in Aussie GDP would show a great growth divergence in the pair, and the pound is relatively weak on the session at the time of writing, although that could of course change. I'd be aiming for that big psychological $2 level, which could be a nice place to take profit. So we'll quickly look at the pound Aussie chart. It's quite a nice one. So as you can see here, it has been a little bit of a chop fest this year, but we rejected that 2.05 level quite nicely, the 100 daily moving average, and we started moving lower. Again, you could target that $2 level. It wouldn't be much of a move for a medium term play, but I'd definitely look at taking some profits there, and then hopefully a break of that, maybe get down to that 1.197 level if if sentiment feeds into that. Although that would be quite a large move, but who knows with the pound. And then for short-term plays, so all targets are based on previous reactions, but as always, be careful with your entry and adjust risk if needed. So, I've got a 8 pip target for Aussie Kiwi because we've had some really nice entries the last couple of prints. But if all of a sudden I get to my desk and, spreads are massive and I get filled at like 20 pips, for example, of course, I'm not going to take an 8 pip target, but just based on previous reactions, these are targets I'm looking for. So it usually pays to enter out of Aussie GDP as soon as possible. But at this time of night in particular, we need to be mindful of spreads. So it may pay to wait 10 seconds for them to calm down. This does tend to be quite a slow move for the Aussie GDP, and we do get some really nice entries. So on the right numbers, I'd be looking at waiting about 10 seconds, wait for spreads to calm down and hopefully get a really nice entry level. So for the Aussie Kiwi, I'll be looking at 8 pips. This will be my preferred play on a beat or miss if markets are stable at the time of the release. And then for Aussie dollar, I'll be looking at 7 pips and the Euro Aussie 15 pips. I'm actually looking at holding some longer term positions here, maybe not for weeks or months, but maybe going into the European session, taking some profit at these levels and then keeping some with stops at break even. That would be perfect. So that's it for today's preview. Nice and short one. Good luck, and any questions, please give me a shout.